Hi, I'm Realtor Bert Tade, and this is another edition of Sipping Coffee or Tea with Realtor Bert Tade. This is an educational video series that kind of cuts through the hype, the hoopla, and yes, even the media negativity surrounding the real estate industry. Now, this topic is an interesting one. It's financing and mortgages. It's a four-part series, and you are watching video number 4 of 4. The first videos, just to recap real quick, were the types of mortgages. Second video was how to get approved for a mortgage, and the last one was understanding interest rates and their impact. So hopefully you found this educational video series interesting so far and of benefit to you. We always want to be a service to the public, and be strictly educational without all that sales pitch stuff. That's not what these are about. This is instead to educate the public. We do ask for one thing in return. If you don't mind, subscribe, like the channel, click that button to also get alerted whenever we go live. And feel free to share the content from this video series. Again, it's educational in nature, so hopefully you're finding this interesting. So this is the fourth video, and it's called Refinancing Options and Benefits. So we're going to go through refinancing in this video. The first topic is going to be rate and term refinancing. So this is one of the ways that you can refinance, and basically it's going to be going into a new loan with a different interest rate and a different term length. So the benefits of this particular strategy, I think, are really huge if you have the right situation in place, right? So you're going to be able to lower your interest rates and reduce your monthly payments, save money over time, and which is of course the key here. Remember, this is we've talked about this in this series. It's a long game, right? It is not a short game strategy. It is instead a long game, and by changing the loan term, you can adjust the payment schedule and the total interest that you will pay. I shared with you guys, kind of on a personal note, we had first bought this home almost 6 years ago at 5.25%. That's what the rates were at the time, right? Based on credit history and whatever, all the usual stuff that they look at, DTI and so forth. We did get a conventional loan, and then that was 6 years ago, so it was at 2018, and then pandemic hits in early 2020 in March, and then they start lowering the rates, to try to stimulate the economy. The Fed does, and mortgage rates, followed in lockstep with those moves, and by following in term, then we were able to refinance, which is what we're talking about here. And we refied a 15-year loan, and I didn't want to be specific about the term, about the interest rate. Let's just say it's in the twos, right? And we did that at a 15-year conventional mortgage. So not only do we already have enough equity in the home that we could just roll those closing costs into the loan, but we also kept 20% of the loan to avoid PMI. And we've talked about that in other videos, private mortgage insurance, right? So it was an 80-20 LTV. So we did really, really well with that one. We're not always going to see those type of situations. In fact, that rate, I don't know, it was a once in a lifetime type of thing. But I wanted to kind of mention that to you, that this is how impactful it can be, because we went from a 30-year mortgage into 15, and the payments basically stayed the same, and we rolled in the closing costs, because the closing costs were $7,000 or whatever for all the prepaids and such. Well, guess what? The $7,000 over the course of 15 years at 2 point whatever percent, that's cheap money. Instead, I used the $7,000 I was gonna pay out of pocket to pay those closing costs. I used those to renovate an apartment that I owned, and so I can start generating more revenue with the value add on that apartment and charge more for rent. for immediate gain, right? So that worked out pretty well. But I wanted to kind of share a kind of a personal story on how impactful refinancing can be. And now there's the second topic is cash out refinancing. So the basically refinancing for more than the remaining balance of the existing mortgage and receiving the difference in cash, right? So the benefits are to access the cash for home improvements, debt consolidation, other such as credit cards, other financial needs. But you could potentially lower interest rates compared to personal loans or credit cards. If you're paying a 30% rate on those credit cards, because what I can tell you is the FOMC, the Federal Open Market Committee, or the Fed that we just mentioned, we talked about lowering rates. Well, they raised rates, right, in 2023, just over and over and over again, and the rates that they were raising do not directly raise the mortgage rates. Those are not the rates. They're the overnight funds rate. However, it's typically going to govern the variable rate loans, as well as vehicle financing, as well as credit cards. So I've gotten statements or letters from my credit card companies telling me, hey, by the way, we're raising your rate to 20 whatever percent. 29.99 I got the other day from one guy, and these guys have gone up and up and up. It's a result of the Fed raising the rate. So anyway, maybe a refinance, a cash out refi, can be helpful if you have those higher interest rate credit cards, and when rates do come down. Here we are at the end of 2024, and yeah, the rates are not favorable for refi right now. However, if they begin to come down, then that could certainly be an option for you. So streamlined refinancing is going to be a simplified refinancing process for existing FHA, VA, and USDA loans, so the government-backed loans, right, requiring less documentation and quicker processing. So the benefits, of course, are easier qualification process, and there's a potential to lower interest rates and monthly payments without extensive paperwork. So that might be a benefit to you, or perhaps something you'd like to pursue. And that is for a government-backed loan, right? So the number 4 topic is no closing cost refi. So that's going to be refinancing where the closing costs are rolled into the loan balance or covered by a slightly lower interest rate. Now, kind of did something similar to that with that refi I was just describing to you that we did back in 2022, I believe. It was 2 years ago, I think. 3 years ago. Anyway. And we've also now, because of that, been able to have fewer, it's a lot less interest that we're paying, and there's obviously fewer months on the loan. So instead of 360 months, 180 months. So we're paying that principal off a lot faster. So we're building more equity in the house. So that might be something that I wanted to tell you about. That refi at a lower, if you can qualify for that lower term and you can afford that additional monthly payment, then maybe it makes sense to go into a 15-year mortgage. But like I was saying here, you're going to reduce your upfront costs in this no closing cost refi and spread the cost of refinancing over the term of the loan. So maybe that's kind of what we did, but maybe that would make sense for you. The number 5 topic and the last one are benefits to refinancing. So again, lower interest rates. So you're going to reduce your monthly payments and your overall interest costs. That's the plan, right? That is the objective, potentially saving thousands of dollars over the life of the loan. So there's going to be perhaps a shorter loan term, like I was just describing in my case. Pay off the mortgage faster, save on interest, and build that equity a lot quicker. So that might be a very good thing for you. You'll stabilize your payments. So perhaps if you're an adjustable rate mortgage, we've talked about the ARMs in other videos in this series, maybe you switch from an ARM to a fixed rate mortgage, right? Either for 15, 20, or 30 years for a predictable monthly payment, right? When we talked about that ARM and Steve that was trying to sell me on that ARM, years back, and I couldn't predict what my monthly payment was going to be next month or next year or the year after, right? I could surmise, but I couldn't tell you with certainty. I couldn't predict that. So that's just not me. I don't know. It's too much of a gamble for me personally. So access equity. So you could use the home equity for major expenses like we were talking about, like home improvements, education, medical bills, through cash out refinancing, consolidate debt. What we did not address in this video, by the way, are HELOCs, right? Home equity line of credit. And that's going to, I'm going to tell you that's become more popular with seniors, especially who have a ton of equity in their homes. Perhaps they own them outright. Whatever that case is, reach out to me for more information. I'm not licensed in lending. I don't want to overstep my bounds. I'm licensed in real estate, right? I'm a real estate broker in the great state of Texas, and I practice real estate in San Antonio. So if you have any questions about the San Antonio market or real estate in general, I'd be happy to answer those questions for you. But I can guide you to the right people that can help you with HELOCs. That's something that is of interest to you. But we believe that by understanding these aspects of financing and mortgages, potential home buyers, that's future home buyers, but also homeowners, can make informed decisions that best suit their financial goals and of course their financial needs. So hopefully you found these videos interesting. This has been the topic of financing and mortgages. This is the refinancing video 4 of 4. So hopefully you found this interesting and of service to you. This has been another video in the educational video series I like to call Sipping Coffee or Tea with Realtor Bert Tade. Once again, I'm broker owner of Santino Properties LLC in San Antonio, Texas. Hopefully this has been interesting for you. Be sure to like and subscribe to the page and sign up for alerts whenever I decide to go live. And feel free to share my content with others. These are educational videos meant to educate and help the public. So hopefully these have been interesting for you. Once again, like and subscribe. Thank you for watching my video, and that's it for now.